Greetings everyone, JJ here from SchoolOfTrade.com with your nightly newsletter, March 31st, 2010, last day of March. Hope you guys had a good day in the room with us this morning. Made some money on the wave trades, made some money in our scalp system today. If you guys are just joining us, don't forget about those 3 important links. Got 3 important links. One's for our 12-month track record. Second one is for our 3-week trial. Third one takes you to our blog. Great stuff on the blog, guys. If you're watching this video on something outside of the YouTube page, just double click on the video. It will take you right to the YouTube page, and you can get those links right there as well. Let's see here. We took 4 total trades, 3 on the scalping system, 3 on the wave system. We took 72 ticks out of the wave. We took 20 ticks out of the scalping. 80 bucks on the scalp. 450 USD on the wave this morning, as you guys can see. 4 total trades. 7130, right? Over 7,000 bucks for the month of March so far. Just shy of 25,000 for the year of 2010, guys. And we'll keep you guys posted throughout the rest of the week. What was the most important thing today? A holiday week, so we had to watch volume carefully. We knew to watch the dollar. We knew to watch the ATR at the open, right? We'll take a look at that in a second. And the markets gave us some clues today early. Okay, we took a trade on gold to begin the day, and that really gave us a lot of feedback. But let's take a look at some of the things we looked at here. The dollar index, the average true range, and then we'll look at that first trade on gold here to get ourselves started. Now here's the dollar index. Now what do we know about the dollar? The dollar is a correlated market. And now when the dollar goes flat, everything else goes flat. When the dollar is moving, everything else should be moving. Now these blue lines here, we had marked up these blue lines yesterday as double tops and double bottoms. As you can see today, we opened up and we're trading at double bottom. Now sideways choppy price action on the dollar means sideways choppy price action on everything else. So do your homework, open up the chart this morning. The dollar, where is it? It's chopping at its double bottom there at its lows, which means the rest of the market is expected to also be pretty choppy as well. So we knew that was going to lead the way today. Then we began looking at the ATR, right? We talked more about this in the members trainings today. But guys, the basics of ATR are real simple. The average true range. Okay, I'm going to use it on a 2-minute chart. Okay, 2-minute chart of the average true range. Here's the crude oil, here's the gold, and here's the nat gas. Congratulations out there for all you traders who grabbed the nat gas move this morning. Had a bunch of traders this morning that grabbed that big move down the nat gas, about 100 tick move down there this morning on the wave. So congratulations. Now there's 2 ways to use this. The first way is going to be getting up into what we call the sweet spot. Now the sweet spot, right, what is the sweet spot? The sweet spot is going to be from 0.15 up to 0.2. Okay, so here's my sweet spot. Now, of course, everyone's going to be different here, but we're going to look for this sweet spot here on crude to be right here. Okay, on gold, it's right here. And, of course, here on the nat gas, it's going to be up here. Crude was the only one here today that actually got us into that sweet spot. And for all you guests out there that are wondering what the sweet spot is, come out and join us in our members training, and we'll tell you guys all about how we define the sweet spot. But for crude, it's above the 0.15 to 0.20, right? Anything between that 0.15 and 0.20. Okay, that means it's going to be 15 to 20 ticks of range every 2 minutes. Okay, that's the sweet spot. Now, in addition to the sweet spot, we can also use a relative comparison tool here, which means we're going to look at where is the ATR now compared to where it was, say, this morning. Well, look at the gold here. I'm sorry, look at the crude here, left-hand side, right? You'll notice here, okay, we start off very low, right? Very low ATR, okay, very tight trading range here at 8 o'clock. Then we jump up, right, which means, of course, prior to 8 o'clock, there was a good chance to grab some trades here. At 9:30, we then started seeing the ATR drop. Now, to use a relative comparison tool, I'm going to look at where am I now in compared to previous times in the past. So, for example, where am I now at 10:30? I'm below where we were at the U.S. Open. That means I want to be careful. Notice how on crude, though, see this high here? Notice how we break above the high, right? When I break above that high, that's going to be another way to use, right, that relative comparison tool. Okay, so once again, I can look for the sweet spot, right? Look for the sweet spot. The sweet spot will be here from 0.2 down to 0.15. And I can also use what I call a relative comparison tool, which identifies the highs and the lows, right? Are we above the highs? Are we below the lows? And I can use that as well. Again, guys, we talk a lot of detail about this in the advanced course materials and, of course, in our members trainings. So come out and join us for that. So ATR told the story today. We had to be careful because, as you can see here, what happened after 9:30? Across the board, right? Across the board, we saw ATR dropping, right? After 9:30, ATR drops. On gold, it drops, right? On the nat gas, it drops as well. So once the U.S. Open came, you can see, guys, the only market that really improved after the U.S. Open was the crude. Okay, the gold didn't, and you're going to see for a second here, guys, that's why we had such a hard time on gold today. So ATR, learn it, use it, and don't be afraid to ask questions tomorrow morning in the room, guys. Let's take a look at one of the trades we saw on the Russell this morning. All right, now I didn't grab this trade. I was watching something else at the time, but I wanted to show you guys a great example of where compensating factors can make a significant impact on your trading abilities here. Now, follow me up top here, guys, on the Russell, right? All the way up top here, here's your 13 range, here's your slow time frame. Signal fires off. We drop, we then retrace off these lows of 78 even. We come up into and then above the zone. Okay, so you'll notice here we get above the zone. I'm above the zone. Now, normally we'd stay away from this trade, right? It's above the zone. However, though, what are some compensating factors that would keep me confident in this trade pattern? Well, look here. Overhead resistance, 80.5, 80.5, 80.2. Okay, great example of where we were above the zone, but we had all this overhead resistance that was going to protect our position. What happened shortly after this was that, if you follow me down here, guys, right? Momentum curled and pointed down. Lower right-hand corner, we have good, strong speed picking up, and price then began to drop. So even though it was outside the zone, we still knew we had some potential here because of compensating factors, overhead resistance. All right, make sure you guys are aware of that and keep an eye out for that next time you guys see a wave pattern that may not be a perfect 10 pattern. Now, here's an example of a perfect 10 pattern that we took today here on the pound. Now, this pound trade happened at 9:43. You can see here, signal fired off short, price comes down, it retraces off these lows at 27, comes back up into the trigger zone. That zone is from 47 to 42. I got short here at 40. You'll see this red line here, up at 52s. My stop is placed at 52. That means that's a 12-tick stop. 12-tick stop means targets will be at 6 and at 12. We took our first target at plus 6, took our second target at plus 12, and then we trailed our stop down, and we got bounced out for an additional 12 ticks. I'm going to take 4 off at 6. That's going to be, right, 4 times 6, 24. I'm going to take 2 off at 12. That's 24 as well. And I'll take 2 off at 12, 24. 24 times 3, 72 ticks, guys, times 625 per tick. That's going to be 450 USD. So as you can see, guys, 940 here, nice big winner here, wave pattern short, 51.40, 72 ticks or 450 USD, because obviously the pound is $6.25 per tick. So nice big pad to the account there, guys, on the pound futures. Let's take a look at some of the scalp trades we took today. First trade here was on gold. Now, this is the example we said before, right? Remember we took an ATR before? The ATR was decreasing after 9:30, so this was about as good as this is about the best price action we saw all morning here on gold. Short-term trend up. Here's my high of day, so I'm looking for the short side. We don't see any break above the high of day, nothing up top there anymore, so we come down, we test our low, break below that swing low. There's the candlestick right there that got me in, right? That's the candlestick right there that got me in right there. And as you can see, follow me down here, momentum quickly curls and points back up. Early exit 17.5. Price wasn't moving anywhere. Momentum curled and flipped up back to the upside. We saw big buyers into the tape. I probably should have gotten out of this trade early, but I wanted to give it a couple more seconds to see what was going on. We took a negative 12 ticks or 100 USD, 120 USD. So it cost us some money there the first trade of the day on gold. We made that money right back though, as you guys can see next up. Next up on the pound, another pound trade here this morning. We had some pretty good luck on the pound this morning, as you can see. Next up here on the pound, again, same pattern here, short-term trend up. Here's my high of day, plenty of room there. We had greater than 6 ticks, right? Greater than 6 ticks between us and the high of day there. We come up, we break above the red line here at 51.56. We make up our swing high. We break above that swing high, 11.02 on the pound. 71 was the fill for this breaker pattern long. Continuing with the trend, breaking through that blue line, we took our plus 4 target, move our stop down to 8. Down to entry minus 1. We took our plus 8 target. We then trailed our stop. We got bounced out at point of entry. 4 times 4 is 16. Plus 16 is 32. 32 ticks, guys. 8 contracts, 625 per tick. 200 USD. So 32 ticks out of the market on the second trade on the pound. We gave 12 ticks back the first trade. As you can see, total them up, guys. Challenging day for the scalps. The wave indicator, though, continues to work flawlessly. 72 ticks in the wave. 20 ticks on the scalp. And, of course, let's prep for tomorrow, guys. Tomorrow is April 1st, a Thursday. So, of course, April Fool's Day tomorrow, guys. Jobless claims at 8:30, 10 o'clock ISM Manufacturing, construction spending at 10 o'clock, 10:30 Nat Gas. Tomorrow, we have a webinar tomorrow, 11:30, on the 7 deadly mistakes we make as traders, so be here for that. And of course, we're closed on Friday, so tomorrow is the last day of the week, so you don't want to miss tomorrow. Be here. Trade Room opens up tomorrow, 7:45 a.m., so come out and join us for that. If you want more information about our webinars, our routine, our setups, our patterns, the beginner's course is designed to be perfect for new traders, new free trial guests. And as always, guys, the lifetime membership, the advanced course, no monthly fees, open code indicators, lifetime access to our trade room. Come join us tomorrow. My name is Joseph James. We'll see you then. Bye-bye for now.